Strata documents. What are they? Why are they important? And what should you be looking for? What's going on, guys? Alex Dunbar here with the Dunbar Real Estate Group and RE/MAX Treeline Realty based out of the Surrey and Langley areas. And in this video, I'm going to be going over everything to do with Strata documents. So if you're a current client, we've probably already had a brief discussion on this. And if you're just someone who's subscribed to the channel or come across this video, thanks for tuning in and I hope you get some value out of this. And if you are interested in learning more about the BC real estate market, I make weekly videos just like this one, so I suggest you subscribe to my channel and hit the bell so you're notified whenever I put out a new video. But to start it off, let's go over a quick outline of what Strata documents are. So Strata documents are essentially a collection of documents held by the Strata Corporation that outlines information about the building or complex. Basically, you can kind of think about it like a report card. They're going to provide you with an outline and an in-depth overview of both the building and complex as well as the unit itself. Typically, there's going to be about 150 to 300 pages, so there's a lot to get through. So why exactly are they so important? Well, these documents are going to help you understand what to expect from your prospective unit, the financial health of the Strata Corporation, and what you are or are not allowed to do inside your unit. Because this is extremely important to both your enjoyment and your financial future, it's important to go over these in extreme detail and make sure you understand what you're reading. You're going to want to make sure you've gone through them either prior to removing subjects or if you're writing an unconditional offer prior to writing that offer. So what exactly should you be looking for in these documents? Well, let's get right into it. First of all, I'm going to give you a quick itinerary of which documents I'm going to be covering today. First, we're going to be taking a look at the Form B, then the Bylaws and Rules, the Depreciation Report, Council's meetings and minutes including AGMs and SGMs, the Financials and Budget, and the Insurance Certificate. Now, this isn't a comprehensive list of all the Strata documents that you may be provided with, but it's some of the primary ones you need to be looking at. I'll also mention that if you're only interested in looking at a specific document, you can go down below and there's going to be timestamps to different points in the video. So if you want to go about it that way, you can skip ahead to a specific document. But getting right into it, let's start off with our first document, which is the Form B. So the Form B is essentially a report card of the unit you're buying. It sets out information relating to the Strata Corporation and its financial affairs. It tells you exactly what is included in the unit and what to expect. I'm now going to share my screen with you so we can go over it in more detail. So let's go over a quick overview of the Form B. First thing we're going to want to look for is the monthly Strata fees. We want to confirm what this payment is because we can't rely on the actual MLS listing. Moving on, the amount owed to the Strata Corporation by the owner. So as we can see here, it is over $3,000. Typically, it's not going to be this high. A lot of times it's $0, but it could be potentially due to the fact that they owe money on a special levy or they're late on their Strata fee payment. In this case, it is actually a special levy, which you'll see later on, but just something to be made aware of. This will be dealt with during the conveyancing process with the lawyers, and the sellers will be responsible to pay it off. Moving on, another important point is whether or not there are any special levies that have already been approved that this unit is going to have to pay for. So as you can see here, March 1st of 2022, they do have an upcoming assessment. That is actually why we saw the $3,105 owing charge up here. So most of the time, again, you're going to want to see whether or not there's any assessments coming up because you want to make sure that you're making the seller pay for those and that you're not taking those on when you get the property. Moving on, the next important part is how much money is in the contingency reserve fund, as you can see here in F. So a good rule of thumb I like to go by is about $2,000 to $3,000 per unit. This is pretty healthy. However, it's not be all end all. You have to combine this information with the depreciation report and all of the meeting minutes to see what is upcoming. Moving on, another important part to look at is Part J. Is the Strata Corporation party to any court proceeding or arbitration, or are there any judgments or court orders against the Strata Corporation? So are they under any sort of lawsuits? Have they been sued? Has there been any sort of legal proceedings against the Strata Corporation? Sometimes what you'll see here is maybe a slip or a fall, which isn't a major issue, but if there's actually been some sort of other litigation or proceeding against the Strata Corporation due to something else much larger, you're going to want to know here, and the details will be attached to the Form B. And moving on, Part L, how many Strata lots are rented out? This may be important to you. First of all, to know if there's restrictions on the number of rentals and they have a number here, at least you'll know how many have been rented and if there's any potential to have them rented. This one has 0. The reason being is that rentals are actually restricted here. But if you do have a building that does allow rentals, you may be more interested in purchasing a unit where there's less rentals because typically owners take better care than renters. However, this isn't always the case, but again, just something for you to be made aware of. Next, letter M. Are there any parking stalls allocated to the strata lot? This particular one is a townhome, so they have a garage. That's why there's no stalls, but what it would show here is what the stall number was, how many stalls there are, and what sort of property it is. So whether it's limited common property or common property. I won't get into that here, maybe at a future video, but for the meantime, just verifying whether there are parking stalls, what numbers they are, and how many. Moving on, are there any storage lockers? This particular unit is a townhome, so again, not as common to see storage lockers with townhomes, but in condo units, there often are. You're just verifying if there is 1 or 2 or however many there are, what the number is, and again, what sort of type of property it is. And lastly, if there are any documents attached, you're gonna find it at the bottom of the Form B. So anything I previously mentioned, you're gonna wanna take a look into that. If there's nothing attached, that's fantastic. If they've made any renovations to the unit and have any sort of agreements with the Strata Corporation, that's also what you're gonna find here. But again, this is just a quick overview, but hopefully that all makes sense. Lastly, in order to actually get your financing approved, your lender typically wants to see the Form B, so you're gonna wanna make sure either yourself or your realtor provides it to them. Moving on, let's take a look at the bylaws and rules. So essentially, this is gonna outline what owners are and aren't allowed to do, what's restricted and what isn't. Now, first of all, I wanna differentiate between bylaws and rules. So if there is any sort of conflict, a bylaw will always prevail. So essentially, the difference between rules and bylaws are that rules can be used to govern the use, safety, and condition of common property and common assets. For example, specifying a specific type of window covering could be a bylaw but not a rule. On the other hand, requiring that dogs be on leashes when using common areas could be a rule. Now, the bylaw document itself is quite long, so I'm not going to actually take you through it step by step. It's pretty straightforward when reading through it, but there are a couple of things that you're going to want to look for. Number 1 being pet restrictions. If this is important to you, you want to know how many pets they allow, what types of animals, and if there's any weight or height restrictions. The second thing you're going to want to look for is rental restrictions. So if there is a restricted amount of rentals, this can be either a number of units or a percentage of units. Some buildings also have no restrictions on rentals and others have a complete restriction on rentals. And just a little rule of thumb here, any building built after 2010 is typically gonna have to allow rentals. However, there may be some discrepancy in the 2011-2012 years. But again, for the most part, this is gonna hold true. Next is gonna be age restrictions. Obviously, this is important if you have a family or plan to raise one. And the most common age restrictions we see might be 19 plus in an adult-oriented complex, 45 plus, or 55 plus. Next is gonna be things like barbecues. So whether you're actually allowed to have one or not and what types, maybe it's just electric or propane, this is important to some and not to others. But just something you should keep in mind. Next is rules surrounding amenities. So what time do they open? What time do they close? Do you have to book them or can you just go and use them? Next, moving on, what can you do in your unit and what can you do in common areas? In regards to your unit, what sorts of renovations are allowed and do you have to ask Strata permission in order to carry them out? So typically, minor changes like painting the walls you don't have to ask permission for. But something more major, maybe like changing the plumbing, the electrical, or redoing the kitchen, you're gonna have to get permission. In regards to the external portion of your unit, a lot of the time, strata corporations want you to maintain uniformity. And this could be as simple as not allowing you to hang clothes over the balcony in order to dry them out. Or they may not allow you to have anything on your deck whatsoever. Additionally, just looking at some of the other additional rules, maybe that's whether you're allowed to smoke on the property or not, and if quiet hours are after 11, for example. Now, every strata corporation is going to be different, and there's tons of other rules and bylaws that I didn't go over, but this is a pretty good start. Moving on, one of the most important documents that you need to be made aware of and take a deep dive into is the depreciation report. So a depreciation report is essentially an overall assessment of the building. You can think of a depreciation report as a long-term inspection, but not only for your unit, for the entire building. So there's 6 key components that the depreciation report will determine. What assets a strata corporation owns, the asset's conditions, when items need to be replaced, how much money the strata corporation currently has, what it is likely to cost for future replacement, and how the strata corporation can pay for those costs. So essentially, it outlines what needs to be repaired and replaced over the next 30 years and what those costs are going to be. It's also used to assess how the contingency reserve fund will hold up with all those costs, and in turn, whether or not owners should expect special assessments based on the fact of whether the CRF can cover those costs or not. So one of the requirements of a depreciation report is that they provide 3 different cash flowing models of how the expenses are going to be paid for over the next 30 years. Typically, they're going to have one where they raise strata fees significantly, which leads to no special assessments in the future. One that's kind of in between where they do raise strata fees, but there are some special assessments, but nothing too major. And one where they don't really touch the strata fees, but there's major special assessments in the future. So from my experience, for the most part, most strata corporations will end up choosing the middle model. But again, it all ends up coming down to a vote. So essentially, one of the biggest things you're going to want to be looking for here is whether or not maintenance has been deferred. Basically, you'll be able to see whether owners have voted against it, and this will be found in the minutes. And what I want you to keep in mind here is that the depreciation report isn't a be-all end-all document. Everything found here is just based on estimates and projections. It's going to provide life expectancies of different parts of the building, such as the roof, but it's all based off of average lifespans. Sometimes it may project that something needs to be replaced far sooner than it actually does. And other times, the strata may actually take it upon themselves to be proactive and replace something sooner than it actually needs to be. Additionally, from my experience, they typically put the estimated costs to be at the higher end of what it's going to be. The reason being is that by taking a more conservative approach, no one's going to be coming back to them years later on and saying, why didn't you tell us to save up more? So sometimes you see absolutely massive numbers, but when it actually comes down to it, the costs are significantly less. Now that's not to say this is always the case, but just keep this in mind because looking at some of these huge numbers can be very daunting. And at the end of the day, a depreciation report is just another tool to be added into combination with reading the other documents. And once again, your lender is probably going to want to have a copy of this, not always, but sometimes, so make sure you have it available. Recent rule changes to BC real estate have actually made it mandatory that depreciation reports must be renewed every 3 years. However, owners are given the opportunity to vote for whether they want to get a new depreciation report or not, and it can be waived if they get a 3/4 vote. Now, if a building doesn't have a depreciation report, or it's been an extended period of time before their last one, this can often be a red flag. Oftentimes, this is because owners want to save money in the short term and don't want to pay those additional costs. But at the end of the day, being proactive and knowing what you have coming down the pipe allows you to plan better and typically save more money in the long run. So just keep this in mind. Moving on, next we have the engineering report. Now I will mention that not all buildings provide this, and if it's not there, it's not the end of the world, but you do like to see it. But essentially, it outlines the structure of the building and how sound it is. Basically, it's a subjective report given by a structural engineer who's going to talk about different components of the building, including the following: the foundation, the building structure, including both interior and exterior, for example, floor structure, walls, ceilings, and roof, electrical system, plumbing system, mechanical heating and cooling system, and any insulation and ventilation issues. So basically, you're going to want to give a quick look to this report and just ensure that the building you're moving into is sound structurally. Moving on, we have all of the monthly meeting minutes, including the AGM and SGM, which stand for Annual General Meeting and Special General Meeting, respectively. So you're typically going to be provided with 2 years back worth of minutes, and this is typically going to consist of one set of meeting minutes per month. So the monthly meeting minutes are ongoing and typically cover some of the smaller issues in the building. This is more or less things like owner correspondence, so this could be break-ins, complaints, or minor repairs. When there are upcoming larger meetings, such as the AGM or different SGMs, this can also be discussed in these meetings. As for the AGM, these occur once a year. And in these meetings, this is where they're discussing any major issues for the upcoming year. They're also discussing any doings of the previous year, finances, and insurance. This is also going to cover the budget for the upcoming year and whether or not strata fees are going to be able to cover it. If not, they may propose to raise them. Additionally, this is where they're going to discuss any proposals to change any bylaws or rules. And if there's any special levies on the horizon. One of the things you're going to want to look for here is the president's summary or message. And basically, this is just a summary. It talks about what happened in the previous year as well as what's upcoming. So the AGM document is going to give you a very clear representation of what's happened in the past and what's going to be happening in the future for the building. And this is going to give you a pretty clear indication of whether it's a good or a bad strata. And lastly, we have the SGMs. So a special general meeting only occurs when something specific needs to be voted on. This oftentimes has something to do with the proposed special levy. Other examples though could be things such as cutting down trees in a townhome complex or a leak that occurred in a roof. Whatever it is, you're going to want to know both what's happened and what's happening and how it's going to be resolved. Next, we're going to move on to the financial statements and budget. So these are going to be documents such as a balance sheet and income statements. So what you're going to want to look for here is how is that money being spent and how is the building being run? Some of the pitfalls to look out for is there a deficit? Have there been any major unexpected expenses? And has the money been mismanaged at all? So first of all, you're going to want to look at the most recent financial statements. By taking a look at the most recent documents, this is going to give you a clearer picture of where the Strata Corporation is financially, especially when combined with the Depreciation Report. Most companies do provide a copy of the most recent financial statements and balance sheets, but not all. Some may only provide year-end financials, so this is something you're going to have to look into. Next, you're going to want to take a look at the current budget. Every Strata Corporation has to prepare a budget for the upcoming year, and this budget must be passed by a majority vote at the AGM. The proposed budget must be provided to all owners as well as a 2-week written notice prior to the AGM. Next, you're going to want to take a look at the operating funds. This is basically the fund that receives funds from the Strata maintenance fees. This pays for all the regularly scheduled monthly maintenance as well as any fees that may come up at least once a year, and these would all form part of the approved budget. Moving on, we have the contingency reserve fund, which I have mentioned already briefly, and this is essentially used to pay expenses that occur less than once a year. So the Strata Corporation can actually only spend money from the CRF if there's a 3/4 vote passed. And this would have to occur at an AGM or SGM, but there is a rare circumstance where they can take emergency measures to take this money out. In such a case, owners must be notified within the meeting minutes for the next meeting. Additionally, any transfer of surplus operating funds that are put into the CRF must be voted for and passed by a 3/4 vote at the AGM. And lastly, you're going to want to take a look at the special levy funds. So these are funds raised through a special assessment for major projects. This could be things such as a roof replacement, envelope replacement, or replacing doors or windows. In order to go through, special levies do have to be voted on by owners at an AGM or SGM and passed by a 75% vote. An important thing to note here is that a separate bank account should be created for each project, and any additional funds remaining after the project is complete must be returned to owners based on unit entitlement. In some cases, where an owner is entitled to less than $100, the Strata Corporation may just put it back into the CRF. Next, you're going to want to move on to the insurance certificate or insurance summary. Every Strata Corporation is required to obtain insurance, and this is for the building on the Strata plan, the common areas, and the original fixtures. You're going to want to be aware of what is covered by Strata insurance so you can plan your home insurance accordingly. The document is typically 1 to 2 pages and shows you the insurance coverage for the building as well as deductibles for different sorts of damage. More often than not, you'll be able to find it attached to the AGM minutes, however, it often comes on its own as well. It's extremely important that you do obtain this document prior to going through with your purchase so that you can provide a copy to your insurance agent to make sure, number 1, that the unit is insurable, and number 2, that you can actually get a reasonable rate. So now I'll show you an example of what this document looks like. They're all pretty similar. Sometimes they're slightly different depending on the company that they come from. But essentially, what you're going to want to look for here is the insurance coverage of the building as well as the deductibles. So as you can see here, on the right-hand side of the document, we have our deductibles. Now, the average range for these different deductibles is typically somewhere between $25,000 and $100,000. Anything that starts to get outside of this range can sometimes lead to issues being able to obtain enough insurance. So the different coverages you're typically going to want to look for is fire, water, leaks, and earthquakes. What you want to pay most attention to here typically is the water damage deductible. The reason being is that it can actually cause the most total damage, especially in a condo building. Not only your unit, but the units beside as well as below. You're also going to want to take a look at if and how deductibles have been raised. If the specific building that you're interested in has already had a claim, there's a good chance that the premiums are going to go up, so that's something to be made aware of. And lastly, as I mentioned, you have to make sure you're able to get coverage for these deductibles. If you are a client of mine, I will be sending you a list of recommended insurance companies which you can get quotes from. And if you're not, you're going to want to make sure you reach out to at least a few different companies to get different quotes. You want to make sure you do this as early as possible in the process, because if you do have things in your contract such as subject to inspection, you want to make sure you can actually get the insurance rather than paying for an inspection and then finding out afterwards and having already spent that money. You're also going to be responsible for purchasing Strata unit insurance, as Strata insurance is only for common property. Both yourself and or if you have a tenant are going to have to get insurance for the unit itself. This insurance policy may cover personal possessions, additional living expenses, loss of rental income, betterments and improvements to the unit, loss assessments, and personal liability coverage. Once again, you'll want to reach out to an insurance agent to get quotes about what these things are and what you need in terms of coverage. And that's about going to do it for this video. I know some of these topics are a little bit dry and not very exciting, but it's extremely important to know about prior to purchasing a unit. This video was just a brief overview of most of these documents. I will be making future videos that go into more depth, though if you are interested in seeing those, I suggest you subscribe to my channel. And if you do have any questions or comments, leave them down below and I'll be happy to get back to you. There is a lot that goes into the due diligence process when purchasing a strata property, so if you are interested in buying either a condo or a townhome, you need to make sure you have an experienced realtor on your side that understands how to read and explain these documents to you. And if you are looking to make a strata purchase in Surrey, Langley, or the rest of the Fraser Valley, I'd be more than happy to help you out. The best way to get in contact with me would be to scroll down, hit that very first link, and book a call with me at a time that works best for you. Thanks so much for watching, and we'll see you in the next video.